Welcome to Behind the Ticker. I'm Brad Roth, Chief Investment Officer of Thor Financial Technologies and Portfolio Manager of THLV, the Thor Low Volatility ETF. Behind the Ticker uncovers the inner workings of the ETF industry. We will interview portfolio managers and ETF service providers to dive deep into their work lives and their businesses. We will learn the inner workings of their strategies and what drives them as they continue to grow their company. Many of these individuals are entrepreneurs and will have unique and compelling insights to share as much goes on behind the ticker. Please note, nothing in this show is investment advice, and it is meant solely for educational and entertainment purposes only. Welcome to Behind the Ticker. We are continuing our live from the exchange ETF conference series with Weldon Rice. He is with QRAFT AI. They are a Korean asset manager and tech company. We talk about all the things AI is doing to help manage investments, as well as some of the things we might be seeing on the frontier of AI. But more importantly, we want to talk about a couple of their ETFs. Their US large cap ETF, ticker QRFT, and their large cap momentum ETF, ticker AMOM. So without further ado, please enjoy this episode with Mr. Weldon Rice. Hey, Weldon, welcome to the show.
Hey, thanks so much. It's great to be here.
So before we get started, can you tell everybody a little bit about your background and how you ended up in your role at QRAFT?
Absolutely. So my name is Weldon Rice, head of AI ETFs at QRAFT Technologies. I think probably a little bit of my background. I think the uncommon would be the sort of progression of my career and life. That's probably the biggest theme. And I started out actually not in the finance industry. Worked a little bit in higher education, and I moved abroad whenever right out of college. So I've been in Asia, living in Asia for a bit over 12 years, and then I ended up studying in finance. While I was there in Korea, studying under some quant hedge fund managers and some really big players in Korea, like Goldman Sachs head there, and really fell in love with finance, especially quantitative approaches to finance. So yeah, I got an opportunity to come on board with QRAFT Technologies, and I know we'll talk a little bit more about what we do in a moment. But I started out in sort of some marketing, and then now heading up in the ETFs.
It's definitely an exciting time to be not only in ETFs, but also in quant AI-driven ETFs. But before we get into the nitty-gritty of all of that, I always like to ask, what are some hobbies, what are some things you like to do outside the office?
Well, right now I have a 6-month-old and a 3-month-old, so I'd say my hobbies are going out to the park and, watching Miss Rachel on YouTube with my daughter and, those sorts of things. But, outside of that, I've always been a big sports fan, played lots of sports in high school, and, I just love watching. So it was great. As at time of recording, we just watched a phenomenal Super Bowl last night. It was incredible. So it was great to be in town in the U.S. here to actually watch it.
Yeah, it was fun. It was a great game. And look, I don't envy you a minute for having to watch Miss Rachel. I went through that. I'm out of Miss Rachel, so hopefully it doesn't last too much longer for you.
Yeah.
So let's talk about QRAFT. I know you're an AI-driven manager. We'll definitely get into all that, but can you talk about the breadth of services that QRAFT offers just outside of ETFs in general?
Absolutely. So as you mentioned, ETFs is just one part of what we do. And we were actually founded in 2016. And we were founded as an investment technology company. So outside of just the ETFs, we also do model portfolios. We've run different sort of vehicles. So we're really a B2B solution provider. So we work with, we're based out of Seoul, Korea. And we work with a lot of the largest financial institutions in Korea starting out. And a lot of that was model portfolios or portfolio construction, helping them to launch AI-powered products, their own products. And then we also do a bit of, we've helped them build some robo-advisors and other such things like that. So we have a bit in some of the tech side too, have a little bit of footprint, but our bread and butter is really constructing portfolios, whether that be security selection, mainly in U.S. equities, or it could be multi-asset, mainly using ETFs for exposure and adjusting, from a top-down perspective, the asset allocation as well. So we've really expanded our breadth of what we do over the years. And in 2 years ago, we received investment from SoftBank, about $140 million. So that was a big change for our firm, and really changed a lot for where we're going.
So I actually had a question about that. What
Sure.
does an investment like that do to help kind of jumpstart the company as a whole? I mean, it probably gives you the ability to do a lot more marketing. I mean, I see you guys everywhere. You guys are doing a fantastic job of being anywhere. Being everywhere. Can you talk about how that's really helped take you guys from maybe a smaller company to, a very institutionalized name today? Absolutely.
So when I joined the firm, pre-investment, we had about 40 people in the firm, and we have a lot of engineers in our company. Actually, the majority of our employees are either researchers or developers, and we built our AI models all in-house, all vertically integrated. So we source the data, we clean the data, everything is done in-house in our firm. So what that investment did for us was the ability to, expand our capabilities in terms of expanding into different asset classes. We've been able to expand even into different jurisdictions. For example, we mainly started out in the U.S. markets, but we've expanded to other Asian markets as well. And on top of that, we were able to also change a bit of the frequency. So in terms of frequency of our strategies, we're looking at anywhere from intraday strategies to all the way up to about 1 month. So we don't really get past doing predictions more than about 1 month out. But we were able to expand some of our capabilities, and that ended up doing a little bit more institutionalized strategies such as long short and other things like that we've been able to launch in recent days.
Yeah, it's exciting, and congratulations to you guys. And so let's talk about AI and kind of quantitative process as a whole. I know AI is thrown around, and there's a lot of different things that go into what actually AI is. And at a high level, you don't really have to get into specifics here, but what types of AI or how are you utilizing AI? Are you looking at pattern recognition, sentiment, news, all of that, none of it? I mean, at a high level, what is the firm employing in terms of trying to make these types of predictions?
Absolutely. So when it comes to artificial intelligence, we've just seen a huge explosion, especially with ChatGPT, and that brings with it a lot of really great, just sort of adoption and people's understanding of what it is, especially from when I first joined the company. But at the same time, it also can bring a bit confusion on sort of what people are doing with artificial intelligence, and especially in financial markets, and how are we using that. Even in the ETF space, we usually start out with, telling people that we're not an AI thematic fund. We're a fund that uses AI to pick the stocks in the fund. So that's usually the first point. But then, you can really drill down AI into about 2 different categories. There's sort of analytical AI, which is looking more at pattern recognition, looking at what is termed in the AI industry structured data, basically numerical data. So we're looking at, price, we're looking at different market data, different ratios. And then there's the generative AI, or, AI that's looking at things like text or images and other things like that. So from our perspective, QRAFT originally started more from the analytical side. We're very much from a quantitative background. Sometimes we call ourselves like a Quant 2.0 in a certain sense, because what we do is we take a lot of those academically researched factors and sort of things from the quant space that have been around for years. And what we're trying to do is use AI to bring a more robust exposure to those factors. We're trying to look at more like risk-adjusted returns, especially when we're looking at security selection in that space. In terms of what we do with the large language models, we don't employ as much on sort of textual and sentiment data, but we do have some capabilities there. And especially, recently we just launched a new ETF with LGI Research, and one of the reasons why we partnered up with them was because they have really great capabilities in the large language models. And so that fund actually has the ability to look at sentiment data from news and incorporate that into the prediction that comes out for the fund. So we're trying to use both technologies, and we really try to stay at the forefront and try to innovate and push the boundaries of what we can do with AI in the space, while at the same time making sure it makes sense. We don't just use AI so we can put it in the marketing materials. I'm more on the marketing side, and I totally, get that it's great to put AI in everything, but we just try not to put AI in there just because.
Yeah, and you actually led kind of right into my next question, which is, how often is your process kind of building on itself? Is it using machine learning at all? And basically the question is, you're not just letting it run wild. Do you have some guardrails on it? But I'm sure you're implementing some evolution over time.
Absolutely. So you mentioned a few things in there in terms of development of the AI. We are constantly updating and researching. We have a lot of researchers that are looking at different ways we could employ different metrics or different data into what we do. And so sorry, can you go back? I got hung up on that second question. What was the original question?
The original question basically is, are you allowing the process to are you implementing machine learning, and
Yes.
and is that changing your process over time?
Right, yeah. So that's actually the point I wanted to make. I remember you mentioned machine learning, and that's also a bit of an interesting topic in and of itself. AI, machine learning, deep learning, all these things were, before I sort of got into this sort of AI industry, were a bit foreign to me. And I think for most people, you might get confused on what the difference are between those. AI is really a broad term for both of those, machine learning and deep learning. We actually employ both machine learning and deep learning in what we do. And the way you can think about it is this: in terms of, traditional financial models were built on, this sort of linear models of sort of regression and sort of regressing back to the mean. And what we're trying to do with machine learning AI is to build a non-linear model, because we know that markets aren't linear. All right, so we know that. So that's what we're really trying to do. And when it comes to machine learning and deep learning, just think of these as sort of like a scale. And as you slide along the scale, you start with machine learning, which are a bit more, simpler models. I mean, simpler in terms of they're less complex, a little bit easier. You can see a little more insights, but they have less non-linearity to them. Whereas deep learning, which is what we also use in our models, that is a bit more non-linear. Also, a bit harder to dig down deeper into what actually was the driving force for the decision. And so our models are constantly learning on updated data as it comes in, and learning as the markets change, which is quite interesting to see.
So before we get into your ETFs, I want to talk about two of them. Does I just had done an interview last week with an attorney who was setting up ETFs in Europe. Is there an ETF market in Asia?
Oh, absolutely. There is an ETF market in Asia. There are many ETFs in Korea. In fact, Mirai Asset, one of the largest asset managers in Korea, actually owns Global X ETFs and several other ETF around the globe. So, and they have their own locally owned ETFs that they have. So Asia has a pretty decent ETF market, I would say. And my boss and sort of mentor in this industry, the ETF, Francis O, who has spearheaded a lot of what we've done in our ETF industry, has spent his whole career, almost 12 years, working in the ETF industry in Asia for Vanguard, Direction, and now QRAFT and AI, which is, I always find such an interesting career trajectory to go from Vanguard to AI, especially making a stop with Direction on the way. So good market there in Asia as well.
So let's talk about a couple of your products. You've got, I'm just going to say QRAFT, the QRFT, the U.S. large cap ETF. From what I gathered, obviously it's AI driven, but you also include in there with human intuition. Can you explain the strategy, as a whole, and how you combine those two things?
Absolutely. So what we mean by human intuition is that, and you mentioned this a bit earlier in terms of looking at guardrails and portfolio construction. There is human intuition in terms of how we look at portfolio construction for the AI. So, for example, the universe that we start with, that's chosen by humans, right? And sort of the factors and things that go into the model are chosen by humans. The data that goes into the model is chosen by humans, but that's about where the human process stops. We let the AI then learn the data, and we fully trust the prediction that comes out from the model. So we don't alter that. We don't go, oh, we're in this stock this month, really? I don't think so. We better dial that down a bit. We don't do that. We trust the process, but at the same time, you mentioned this a bit earlier. We do have guardrails in terms of how much concentration we can get into different sectors, and so we definitely do, and we have some risk controls within the models to help that out as well. So we really try to follow the investment process of human managers, but we're trying to let AI have a different look at what the data is telling us, and really bring a new approach, I think, to portfolio.
So you're investing in large cap U.S. securities or large cap U.S. equities only.
Yep.
About how many names can be in the portfolio at any given time?
So for QRFT, that can be about 300 to 320, around there. So that fund is really a well-diversified fund. And we made that really to be an enhancement on sort of a traditional large cap passive exposure. We're really trying to, we kind of call it say that we're long-term investors, but at the same time we have a short-term, view. So we really try to make adjustments in the short term on a monthly basis, trying to find sort of patterns in the market, to find little inefficiencies here and there, and then over the long term build up a really robust risk-adjusted return, and hopefully that we believe that's going to be bring alpha over time.
So with 320 names, how does the portfolio weighting work? Is that a machine-driven process to kind of pick out and rank maybe the best ideas, or can you just talk about portfolio weighting?
Absolutely. So the first part of the process is a bit more looking at our factors. So we use traditional academic factors as well as some of our own proprietary factors. And then we score the securities based on that. And then we also have a model that does the weighting process as well. So we look at, okay, here are the scores from the factors, and we put that in another model with other market data as well as some of the fundamental data from the securities, and that will give sort of its prediction for what's the best stocks that we feel over the next 4 weeks have the best price appreciation.
So how's a portfolio rebalanced or traded? Is that a monthly rebalance? Did I hear that?
Yes, that's right. Yeah, so we do monthly rebalance, and for that fund.
So I know being active, we run an active strategy. You guys are running an active strategy. Can QRFT get defensive based on your signals, or does it always kind of stay fully invested, or does the defensiveness, if you're seeing weakness in the market, kind of direct in which assets it may be going to?
Yeah, I mean, because it's equities, there's only a certain amount of defensiveness you can get, but because we're looking at different factors in the market, for example, when the market does get a bit more defensive, we see that value factors and quality factors tend to be the factors driving the model a little bit more. Whereas when the market's really growing, we start to see a bit more on momentum and some of these other growth factors that come in. So it can get a bit more defensive, and it really adjusts itself over time.
So speaking of momentum, you also have AMOM, which is your large cap momentum ETF.
Exactly.
So what is the biggest difference between the U.S. equity large cap and this one, which is the momentum version?
Right. So in this case, we're sort of singling out one factor, the momentum factor, whereas QRFT, it's looking at multiple factors across, there's many different factors there. So that's one key difference. The other is the number of holdings. So QRFT is very well diversified. I call it kind of a slow mover because it's got a lot of holdings in there. AMOM is a much more we like to say, because we're from Korea, we like spicy food. AMOM's a lot more spicy. We only have 50 holdings there. We can get some pretty high concentrations in sectors and in stocks. I mean, we have some guardrails there, but we can go up to 50% in a sector, and we can get somewhere around 9 to 10% in a holding at some point. And I think recent market conditions have sort of been really interesting to see because the market is very concentrated right now, and so we're actually seeing our momentum fund really get some pretty big concentration in some of these holdings.
It's interesting. So is it also, just to compare the two again, is it also traded on a monthly basis?
Yes, it is also just like QRFT on a monthly basis.
Interesting. So I know you guys have a lot of other products, and I'm going to have you or somebody else from your team back on because I know you're going to keep launching ETFs. Yeah. But let's talk broadly as we kind of close out. How should advisors, if you're a registered investment advisor, how should they be thinking about implementing AI-driven strategies inside their portfolio? Like, do you see them as a holistic solution or more of like a satellite exposure they should be tagging or adding along maybe some more traditional passive holdings?
Yeah, absolutely. I think, our view is that, AI is, we definitely believe in the technology. We believe in what we're doing. But at the same time, we understand that, AI is not perfect. And so, we believe that AI is a great complement. When you think about what artificial intelligence is doing with the data, it's really taking a very different view of the market and data than a human manager would. So we believe this provides a very interesting diversification effect for advisors to look at, and this really complements a lot of either, QRFT, I think could be a good complement to maybe a more of a core exposure, passive exposure. If you're looking for a little bit of active enhancement to a more of a passive exposure to sort of a large cap, I think it's a great complement to be sort of a sleeve there to give an active, data-driven, systematic, but flexible approach. And then AMOM is a bit more of a satellite stylistic fund that's going to give you, an ability to be a bit more like trend following of the market. So instead of just taking that long-term view that, okay, the market's going to go up over time, let's take some, bets on the market of what we're looking at currently and follow some of the trends that are going on in the market.
So kind of a last question, and it's AI driven again. I agree with you, and I have the same sentiment as you that AI is interesting. It can do a lot of things, but it can't do everything. Yep. You have a lot of engineers on your team. At what point do you think, and total prediction, nobody's going to hold you to this, do you think that maybe the human side is going to take a step and maybe sit in the back seat a little bit and just let AI make all of the decisions?
That's, we believe that future is very possible. Maybe not for every, but we definitely see that this is really, I think, the future of where a lot of portfolio construction is going to happen going forward. But at the same time, there are so many different reasons why people invest and different themes that they might want to cover. So AI is not going to cover every single thing, but we believe that majority of portfolio construction and things going forward is actually going to have some part in AI, whether it be the AI actually making the stock selection, or whether it be analysts or teams using AI for their research. And coming up with some ideas on their universe or their investment thesis. We definitely see AI as a huge part of that going forward.
Well, Weldon, I can't thank you enough for joining us. I really appreciate it. Before I let you go, where can people learn more about you and learn more about QRAFT Technologies?
Absolutely. Well, you can always find me on LinkedIn. And QRAFT Technologies, you can check out QRAFTAIETFs.com or QRAFTTech.com. And by the way, QRAFT is with a Q. Not a C, and actually QRAFT stands for quantitative craftsmanship. If you're curious about that, so QRAFTTech.com or QRAFTAIETFs.com. You can find us. We're always happy to reach out.
Well, again, thanks for being here. I hope you enjoy the rest of your week.
Appreciate it. Thank you very much.